And good evening. This is the Eye of the Storm podcast for the S&P 500 and the NASDAQ 100 for Sunday, October 23rd, 2022. The expiration did fairly go according to plan, being that we were finishing a B wave, which we did first thing in the morning on Friday, and then turned and ran higher as the C wave began to unfold. Now, as I start today, I will pick up with Friday's activity and where we are and what all that it could mean going forward. But what I want to begin with is, obviously, if you're noticing on the chart, there's been a label change. This particular count, where this low that we had last on October the 13th was actually the completion point for intermediate wave one. Prior intermediate wave one has been up here. Two, this was intermediate three, this was intermediate four, which puts a quick end to the larger primary C wave decline, being that all that would be left after this particular rally is complete is an intermediate fifth wave down to complete it. This particular count, implication number one, is that we have not even begun an intermediate third wave. So the next slide lower is, if this is wave one and wave three was going to be longer and stronger, it is going to just decimate the market. So the implications of this particular count or this view are from much deeper levels. In particular, I would be looking for intermediate wave three to come in somewhere around the March 2020 lows under this view. I am not saying that this is what is in control. But at the moment, I'm hearing from others who are also subscribers who are suggesting it, who are looking at it and asking, is that off track? And then I have seen that there are other analysts who are basically calling for the same type of move. So they're considering that this is a five-wave decline from the all-time, right? So from the high of primary B, we have only completed the first intermediate wave that out of five that are due to complete primary wave C. So from here to there, wave one. If wave three is yet to come, it is going to be longer and stronger. And right now, 43.29 down to 3,500. So we've already got about 800 plus points coming off. Wave three would be 800 plus points or more, and likely more. And from where we are, we're already down to 32. And we'd be looking for it to be stronger. So you're looking at 3,000, possibility down to the 26 area. And that's just wave three. Then you got a 4 and a 5. So we're looking for a primary C wave that's going to be quite devastating and likely be the one that's going to shove the market into the completion or the end stages, or the 2009 lows that we talk about. So it's the end stages of cycle wave A, and then we have that cycle wave B rally further out. Now I'm talking about that all of this takes much longer. We're going through the end of the year. We're going into 2023. We're going quite a bit out. So which means, again, going with what we're hearing from other people, that in terms of that the recession, that the inflationary period, that all of the things that are negatively impacting the economies globally are not going to be resolved. And so they're looking for more time. They're pushing this out, and that things will get worse before they actually blossom into a new economic expansion type of a move. And that fits on an Elliott basis in terms of we're looking for a cycle wave A low, a cycle wave B rally, followed by a cycle wave C decline. So if this is the case, then we are still looking at a rally, which actually is well underway, but it's going to be ABC and it's going to be an intermediate wave 2. So this whole cycle wave A bottom and a cycle B wave, that's now pushed out. That's not coming. So there'll be another reason that maybe the Fed actually does pivot, but it's out there somewhere and not now. So, because part of what I'm also seeing from others is that they're looking for, and these are all technically based, I believe, but they're looking for the 10-year note for the yield to come dropping back down, which I actually do not see. I don't see how the Fed could pivot as much as the market thinks it wants to, or they think the market's going to be indicating. So a lot of things I just don't see, versus what I do see is the probability and the potential for this particular view to be enforced much more realistic. So I am going to take a look at it. Okay. So what we're looking at is that instead of this being intermediate wave 3, intermediate wave 4, it turns into minors all the way down. 1, 2, 3, 4, 5. It fits, it's clean. And then intermediate wave 1. So we're in an intermediate wave 2 counter trend rally, of which we, in my opinion, have already completed waves A and B. And I'm going to go from the 4, I'm taking it down to the 1 so we can see it a little cleaner. There's the A, there's the B. So this is what we're working on. Now, so they've all been very clean, by the way. This one, is that typical B wave? Yeah, it truly is. A, B, and a C. Looks like garbage because this actually was a lot of very difficult trading. Running, dying, running, collapsing, running, dying, running. But as long as we keep and maintain the count, and what we see follows, fits in much cleaner. So we're in a C wave, a minor C wave up to complete intermediate wave 2. But prior on view number 2 now, so if we got 1 and 2, I'm going to keep this as view number 2. So view number 1, which suggests that this is an intermediate degree, but only a 4th wave, not a 2, a 4. Same pattern, same trajectory, same fibs. So yes, either direction, it's what would come next that the count really affects. But so let's talk about right now what we got going on in front of us, and we're going to be picking up in about 8 minutes as the Globex session comes in to begin. Right now, they are actually quoting down a little bit. NASDAQ quoted up a little bit. So going to be an interesting opening right now as it figures. But in any case, what we got going on is an ABC. A's done, B's done. B finished up and it went right to support. Coming in to the day on Friday, it went right into support, reached it and went and just turned and did not look back. So this is on Friday. This was expiration. We did have the 10 o'clock hour was a down hour, and it was a great little turn. So it ended up being a small 1, right? We're in a minor wave C, minute 1, minute 2, we're in minute 3, and we're off to the races. Or it could be even bigger. But right now, that's how I'm kind of viewing this. Again, hourly chart. So what can I expect? I've been looking that the market will continue to go up. Little pullbacks or small pullbacks notwithstanding. So I'm still looking for pullbacks, even though during decline we got pullbacks. They just were bounces, but the market continued to go down. So we're just going to follow the count. If I'm counting 1, 2, we're in a third. 37.79, 38.11, possibly for the third to finish up. I can go down further and then start looking inside this wave to see, well, where are we? So let's open that up. I'm down to a 15-minute chart. And I got 1, 2, and then that's actually another 1, 2 probably. And this would be a smaller third, this internal third. Do a little pullback, rise up 4. And that completes this is 1, 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, possibly finishes up there around that 3,800 to 3,811 level. We get 4 of 3 and then a 5 of 3. And you can see how are we going to get up to this level? 39.16. Well, that's how. If we're building in a third, and I'm going to count this again. So either this is 1, 2, and we're in that 3, which still could end up here, do a little 4, and then the 5 ends up somewhere up into this area. Our additional resistance after 38.11 comes in at 38.35, 38.57 to 60, we'll call it, and 39.15 to 20. Or anywhere in between. It depends on what the count, what we can call as complete. We're looking for a total of 5 waves up. There's a possibility this is 1 and 2, and then we got 1, 2, 3, 4, 5 of 3, 4, and a 5. That's how I'm going to look at this. So what does that spell for tomorrow? More than likely, we are going to continue to go up. We'll get small pullbacks, which I believe will be held. Again, 15-minute chart, and drop it down to the 5 as we start to really look to see where we can wrap fibs around, where we can kind of go. And so as we're trading this during the day, all right, so now on a 5-minute, even clearer, 1, 2, 1, 2, a lot of fits and starts. So you can see we got a lot, we get the downside moves. But the overall move was higher. The overall move was up. And the way the count would have been done is 1, 2, 1, 2, likely finishing up that third, the 3 of 3. Beautiful. We get a 4. Again, I'm going to be looking for it to basically hold within or on or attach itself to one of the moving averages, the 20, the 50s. I don't believe we come down. It's a 4. There's the previous. That's the 20, or halfway between the 20 and the 50. 37.60, maybe. And then a rally again. So bottom line, the trend remains. Right now, our very short-term 5-minute trend should continue to point higher. We've got our levels, 37.80, 38.11. Where they're going to come in. Now, what we're finishing here, folks, 1, 2, whatever this 3 is, a 4, a 5, that completes the 3. 1, 2, 3 of this larger 3. Or this is going to be 1, 2, and we're finishing still the third, got a 4 and a 5. No matter what, we still have more upside. So if barring anything that upsets the apple cart, which we know there's plenty out there that can do that. So again, breakdown from here. Being that the mood and the tone is being set and the spin is kind of being set that we're going up. That the markets have reached a bottom. And cyclically now we're also going up. It does fit a very short-term cycle, but understand that short-term cycle, I think, also peaks towards the end of October. So this whole thing began back on October 13th. So we got, if we got a cycle, that was the cycle low. We've now got a cycle high of that same cycle that arcs and comes back down. That's a short term. We have longer that are still pointing down. In any case, cycles is a different discussion. But I do believe that we still are going to see some upside to begin the week. Next week as well, we have the big boys are coming in to report. We got Apple, we got Amazon, we have, I believe, Google. Yep. Google's on Tuesday. Amazon is on Thursday. Apple is on Thursday. So Tuesday and Thursday, big. At AMD, they're out into November, which is next week. We have Meta. They're actually on Tuesday. So et cetera, et cetera. So we have a lot of the larger companies that are coming out to report. Being that Metaverse is coming out first, it's going to be interesting. It's going to be because we had all the news about, online advertising, social media, et cetera, which does not portend well. I mean, you can just see we just spiked a little bit higher. So I still believe that what we're finishing up is maybe that little thing, all that was the 4. I'm not sure. And we've gone up and we'll see what we want to do. But I now need to go up and over to the NASDAQ, and that's on this count. So no matter what, on the larger picture, no matter what, if it's intermediate wave 1 at the 13th low, or whether it actually is intermediate wave 3, to be determined. Right now, we're working on a short-term chart. So let me go back out to the 4-hour chart. We're just going to be clean. We're going to start it over again, okay? So what we have is, again, 1, 2, 3, 4, 5, minor degree, finishing intermediate wave 1 to kick off the start for a primary C wave down. If that's the case, what we're involved with now is an intermediate wave 2. This, again, is view number 2. View number 1, which is I'm also working, I'm just showing them together right now, is that this remains intermediate wave 3, and we're in an intermediate 4th wave, and we still will come down on an intermediate 5th. The difference between these two counts primarily is that next wave that's coming, which would declare itself to the downside. If it's an intermediate wave 3, it's going to be much harsher and deeper and longer than intermediate wave 5, just by Elliott guidelines. So right now, 1, we're in a 2. So no matter if it's, to tell you the truth, no matter if it is intermediate wave 2 or intermediate wave 4, it's the same counts in between. So we have minute A, B, C to put in minor A. Here we have minor B, same picture, right? It was not pretty. It was kind of ugly, but it got there. And now we've launched higher in the C wave, and they're just off and running right now. The market's up 125 right now. We are going higher no matter what, and everything is to be ignored. We got big boys reporting this week, and we're going to be prepared. Whatever the situation is, we're moving higher. 1, 2, I think we are finishing up. Again, come on down to this because we're gapping, and it's pretty bullish bar on the 15-minute to start, although we're 2 minutes into this. So 1, 2, we're in 1, 2, 3, 4, 5 of 3. Maybe I got to put a 3 up here, and we pull back in a 4. Still, now from here, it's going to look like pretty severe because we're going to drop him back towards the 8, with the possibility of a deep to retrace him back to the 20. But from here, now I'd be looking for a pullback. Whether they're willing to give it up right now, I don't know. Too many people coming in to make their adjustments to do what they think they need to do right now to get flat. Okay, just hedge in deltas. So going down to the 5 because we want to take a deeper look. And again, I'm doing this now because this is kind of what I intend to show when I kind of take things live here on YouTube. That's in the works, by the way. I'm letting the cat out of the bag. I'm looking at taking it to live trading for the first 2 hours and doing it live on YouTube. More on that to come. Now, so same deal. But here I did mark this as minute 1, minute 2, and 1 on minute 3. And even though this just kind of looks like a 3, trust me, I can break it down even more. And so I'm willing to say 1, 2, and then putting in the 3rd. They're not giving it up yet. Now, if I had to, I could put some fibs on this. These are just very preliminary to see where, where wave 3 could go, right to where it should. 519, so 11,520 is 1.618 for third wave compared to the first. Perfect. That's a level. From here, if it's going to time to pull back, you got a 4, and it could here as well. We could get a nice little turn here. And it could be received as a rejection of that level, and it just might be. Because a fourth wave, you're looking, here's where all the activity is. This was the spike. This was the just run with it spike. And they're just they need it. So whatever's going on, they are hitting the dollar. So bonds aren't doing screaming, but again, whatever's happening is happening in conjunction, and it just could feed off each other. Let's keep an eye on here. So the focus is here. If we need to look to see what is behind it, well, we know it's a third wave. So I'm looking for a 4. I'm looking for the pullback. What's going to cause it? Who cares? But I'm not looking to go very deep, but it'll appear deep because it gapped today. It gapped up 100 points. Now working on 150. So we got a lot of people just shifting in and changing positions on a Sunday afternoon / evening. And here we go. So again, we have, we're right there against the next resistance, 1.618. Boom, right here. So it could be short covering. Who knows? I don't know. But next level, you just keep moving it up. 1 to 2. We're there. Next level is 545. Next level above that is 16 or 11,630. That's 200%. Where wave 3 will be 200%. We would then start looking at other things, because what I have on top of this, move that drawing. Here we got other. Let me take it back out to the 4-hour chart. We're looking at 382 for intermediate wave 2, comes in at 728. Do they want to do it right now? They may. They may. Because ultimately what we're looking for the wave 2, remember what's most common, 50 and 62%, 12,112, 12,500. Could they do it? Yes. Spoon feed enough to people and they will come in. Force the change, force the turn, force the changing of positions. And plus people just get gone. Now and again, I'm a day trader. So I'm looking at that 5-minute chart. I'm just going to go, I'm going to play the price action. That's what I'm going to do. Worry about the rest later. This told you, get out of the pool. They just took it higher. I don't necessarily want to jump in here, although it's proving to continue. Because I'd definitely be looking for a turn. And then for it to come back down. So oversold, overbought. I needed to pull in. This would be the likely place. But look how high. So the fact that it's pretty far away from the 20 keeps me out of the pool right now. At least buying it, thinking that we're going to continue to go up, which eventually I agree it will. But right now, I think we need to pull back first. Now, that's a very quick look, and that's looking on a 5-minute chart. Hourly, the story's pretty clear. If we're on to the other count where this is an intermediate wave 4, then we're looking for 11,728 to come into the picture. Not there yet, but that would be the previous 4th. And a wave 2, we add a little bit more to it. And that's we'll find out. But better to know these levels if we start to break than to have to be stuck wondering what the heck, what's my next area? What am I playing against? So now we're putting parameters around it. So for tomorrow, I'm also NASDAQ as well. I'm looking for continued higher pullbacks notwithstanding. Allow for the pullbacks. If you're, and again, if you're trading, if you're in it for the hour or however long, and you're in it for a while and you've got a nice profit, you could take your profit and re-enter, or you can hold it. But from where it is, I think a pullback from here can take it. much deeper than you want to give back. If you're sitting with a sweet profit, you might want to take it and let the market pull back. Enough said. Again, new labeling, not necessarily the one that's going to be in play. I'm going to leave it right now, obviously, because I just went over it. We're going to see how this plays out. Tomorrow, again, we're in a week where we have the larger tech companies giving their earnings. And so there's a whole lot of spin going on out there right now, a whole lot of spin. It continues to revolve around the dollar. It continues to revolve around interest rates, which again sit at the top of the pecking order, and it works its way down. I'm going to go on an Elliott basis versus I'm going to go on what's happening over there, because I think that that narrative is not correct. Next update will be on Monday, the 24th.